Hey investors, and welcome to this episode where we talk a little bit about what the Federal Reserve did on Wednesday. So last Wednesday, the Federal Reserve Chair Jerome Powell came out and decided, along with his colleagues, that they wanted to raise the federal funds rate by 0.5%. Now, what does this mean for you and I? Well, this means that any mortgage payments that you have, the interest rate will go up for variable mortgage rates. Also, loan payments, the interest rate will go up. So your monthly payments on your mortgage or your loan will go up. It also means that your savings rate, so the interest that you receive on your savings accounts, will go up. Whether or not your banks have implemented that as yet, there could be some lag. But that's essentially what it means. What did the markets do? Initially, after the press conference and after the news hit the wires, markets loved it because there were some rumors that there were going to be 0.75% increase, so 0.75% increase. And when Federal Reserve Chair Fed Powell came out and said that's off the table and they're only going to be doing 0.5%, markets liked it. That was the first initial reaction. So the US indices rallied more than 2% in the late hours of trading on Wednesday, kind of in celebration that there was not going to be a 0.75% rise. However, overnight and into the pre-market on Thursday, we saw a huge collapse in US equities. And that ran through Thursday and into Friday, where we finished extremely lower. And the concern there is that the Fed is going to be raising rates by 0.5% at the next few foreseeable meetings. So what do we do going forward? Well, during the financial crisis of 2008, we saw prices move down from their peaks more than 75%. So just a reminder, bear markets do not necessarily or do not usually last only a few months. So I would just suggest that you consider in your analysis that this is a downturn or a downward trend that will continue for the foreseeable future, and make adjustments accordingly. Be very careful not to fall into the trap of trying to buy the dip, and just be very mindful that when we were in the bull market, it lasted for more than 10 years, where we saw extremely overvalued prices, and I would argue we were in a bubble. Now that the bubble's burst, a lot of people are hoping and wishing that the burst takes a few months. I'm in the camp that there is a lot more downside to come, and I'm preparing myself accordingly. Thanks for watching. Please watch our other videos and lots more like this to come. Have a great day, everybody. Remember, this is not financial advice. You are responsible for your own investing decisions. Have a great day and happy trading.